How can a wealth tax help create income equality in America? Hi, and welcome to another video of tax series from Pars Financials. My name is Arash Shahriari, an IRS enrolled agent, and my goal is to educate people on economic issues. My hope is to run for office and use my knowledge to elevate the life of people. Wealth tax, as the name suggests, is a tax on wealth. But it's not just any wealth we're talking about here. It's a tax on net worth, which is the total value of everything you own minus what you owe. So if you have $1 million in assets but owe $500,000 in debts, your net worth and the base for your wealth tax is $500,000. Now you might be thinking, isn't that what income tax is for? But here's the catch. Income tax and wealth tax are two different things. While income tax is applied to the money you earn in a given year, wealth tax applies to the total value of your personal assets. This includes cash, bank deposits, real estate, assets in insurance and pension plans, ownership of unincorporated businesses, financial securities, and even personal trusts. You see, many Americans of a generation or two ago, by simply being lucky to be in the right time and place, were able to gain access to so many things, sometimes for free, which now are worth millions. Non-availability of those free things for later generation has caused the disparate income inequality in the United States. An example of were the series of Homestead Acts enacted from 1862 all the way until 1976, which allowed many new immigrants to get literally for free 160 to 320 acres of land just by making minor improvements on the land. To make things worse, through the process known as redlining, by the very corrupt legislatures, the Federal Housing Act of 1934 essentially made housing facilities inaccessible to many minority Americans, which further widened the gap further. Now, why is this important? Well, the wealth tax aims to reduce wealth inequality by redistributing wealth from the very rich to the less fortunate. It's like Robin Hood taking from the rich and giving to the poor, but with the government playing the role of Robin Hood and legality replacing the archery. Wealth tax is a topic of hot debate, with supporters arguing it could help level the economic playing field and critics warning it could harm economic growth. But before we dive into those arguments, it's important to fully understand what a wealth tax is. In understanding the potential impact of wealth tax, it's crucial to grasp the concept of income equality. So, what is income equality? Simply put, it's the equitable distribution of income among individuals or groups in a society. In an ideal world, everyone would have access to the same financial resources, but the reality is quite different. In America, the gap between the rich and the poor has been widening for decades. The wealthiest 1% of the population holds nearly 40% of the nation's wealth, while the bottom half holds just 1%. This disparity is a clear indication of income inequality, and it's a pressing issue that demands our attention. So, how could a wealth tax help? A wealth tax is a levy on the total value of personal assets, which includes bank deposits, real estate, assets in insurance and pension plans, ownership of unincorporated businesses, financial securities, and personal trusts. By taxing the wealthy more heavily, the government could potentially redistribute wealth more evenly across the population. This redistribution could take the form of increased public services, improved infrastructure, and better educational opportunities, all funded by the revenue generated from the wealth tax. These initiatives could, in turn, provide individuals from lower income brackets with more opportunities to improve their financial standing. However, it's important to note that a wealth tax is not a magic bullet for income inequality. while it could potentially narrow the wealth gap, it might not eliminate it entirely. Moreover, it could provide the government with additional funds for public services, but it would also require careful regulation and oversight to ensure that these funds are used effectively and efficiently. In essence, a wealth tax could be a tool for promoting income equality, but it's not a one-size-fits-all solution. It would need to be part of a broader strategy aimed at addressing the root causes of income inequality. While the wealth tax could potentially reduce income inequality, it's not without its challenges. Well, while wealth tax sounds like an effective tool for income redistribution, implementing it is no easy task. Firstly, let's talk about the valuation difficulties. Wealth isn't just about stacks of cash in a vault. It also includes assets like real estate, stocks, and even artwork. The valuation of these assets can be complex and fluctuating, making it difficult to accurately calculate a person's wealth. Imagine trying to assign a precise dollar value to a piece of art or a vintage car collection. It's a daunting task that could lead to disputes and inconsistencies. Next, we have the issue of capital flight. This is when wealthy individuals move their assets or even themselves to other countries to avoid paying the wealth tax. This could lead to a significant loss of wealth and potential tax revenue for the country, not to mention the brain drain if these individuals also happen to be business leaders or innovators. Administrative costs are another hurdle. The process of valuing assets, tracking down wealth, and dealing with disputes can be costly. These expenses might eat into the revenue generated by the wealth tax, reducing its effectiveness. And let's not forget about potential opposition from the wealthy and powerful. These individuals often have significant influence over political and economic affairs. They may lobby against the wealth tax, arguing that it discourages investment and economic growth. Despite these challenges, however, the conversation around wealth tax continues. This is because the wealth gap in America has been growing, and many believe that a wealth tax could help to address this issue. It's a complex problem that requires careful thought and consideration. So while implementing a wealth tax might be challenging, it's important to keep the dialogue open and explore all possible solutions. As the saying goes, where there's a will, there's a way. Despite these challenges, the conversation around wealth tax continues, indicating its significance in shaping America's economic future. Let me know in the comments what you think about the wealth tax, and if you are in favor of it. We appreciate your involvement.